Hey, hello everybody. Welcome to the weekly roundup. Hart Investment Group. I'm Scott. That's Ben. August 18th, 2023. Ben,
Good day.
what happened over the last 7 days that will excite and entertain our audience?
Wow.
Good
Hit me
setup, eh?
with a big one there.
I
Good
know.
setup. Lots of exciting things happened in the world of economics and
Mm,
finance.
mm,
So got lots to cover this week. We so I've started to do the daily updates there and charts, and so we're starting to get quite a bit of traction. People are starting to follow along on those chart updates that we're providing, so that's interesting. But as for what's going on in the world, always lots going on in the economy and such to cover. But yeah, I think more than anything, it was another red week generally in the markets, with most assets down this week, with the exception of the US dollar, and currencies have played a major part in the past couple of weeks. And if you follow some of these economists that like to get in the weeds, lots of blames being placed on the Bank of Japan and their interest rate policy, yield curve control, things like that. That's grabbing the kind of the macro headlines, and continued data coming out, CPI, uh, bankruptcies, lots of things happening. I guess probably the biggest news over last weekend would have been some of the Chinese real estate companies have started to move towards bankruptcy. There's been bond defaults, bond mispayments. Their ISM numbers are coming in really far below 50 now, showing that China continues to be under pressure right now. So they're trying to stimulate, and so I'd say that's a around the world snapshot of what happened this week.
gotcha.
Yeah,
Volume still low for summer, or start to come back in August, I guess, or more September?
definitely more in September.
Yeah.
This week it was hit and miss. Like yesterday, volumes were pretty light. Day before, pretty much in line than previous year. But it's been kind of hit and miss this week. But yeah, I think CPI probably was the biggest mover of markets, we'll say, over the last 5 days. So volumes were up on the day CPI came out. But yeah, besides that, pretty light. August, light. Um, we talked today about corporate activity is extremely light. I think in the daily we'd mentioned that Canopy sold their plant in Smith Falls, so they're hurting for money, so they need to raise some money there. But on the corporate raise side, hardly any companies coming to market to raise capital. We had on the corporate side, we had Northland Power do a bond issuance about 2 weeks ago, 500 million. And the stock was under pressure a bit initially, and the last couple of days here, it's up kind of 6-8%. So starting to see some life come back on that. And I did look at National's research too on Northland recently. They got close to a 50% upside target on with the current view on where they think that company can go. Yep.
All right. What three slides do you have for us today for this week?
I have 5
Oh
today
man. Okay.
because I'm feeling like it. Trying to
Okay.
put out some good content, trying to add value
All
where I
right.
can.
We should mention too, if people want to see your daily videos, you can see those on LinkedIn and Facebook. And
And YouTube. Is that you or me that froze? I think that's you that is froze, so I am going to continue to trudge on here. Um, Okay, so we'll give a quick update here. It's just a bunch of things I look at, but this is a pretty good, I think, snapshot to see what's happening in Canada. It's a great chart that Thompson shows us to give a picture for kind of some of the key points for what's happening in the Canadian economy. Obviously, you can look at pretty much any country you like, but this one is most relevant to us here. So a couple things you look at is current account balance, year-over-year percentage change, the money supply, which would be M2, so that is all money in the system, so central bank, and individuals, unemployment, inflation, and GDP. So the final three, I think, are certainly very important. GDP and inflation plays a major part for what's happening with central banks. And so we've seen, obviously, inflation start to come back dramatically. We saw a small uptick here, which is getting all the press and attention. We saw a slightly higher inflation. A big chunk of that was a result of higher rates. So Bank of Canada is causing inflation now. And then we have year-over-year GDP, which we have slowing. Ultimately, I think we have that slowing towards zero. And the last thing that central banks have been waiting for is this number here in the middle. And so what we're starting to see now in Canada is unemployment tick up. In the US as well, we're seeing unemployment tick up. US data is a little bit more detailed. So you can also see part-time work is slowing. Temps are losing their jobs. Overtime pay is also slowing. So less people working, less hours. So this is kind of the last data set that you'd see in every typical end of cycle activity. And so if we look out to Canada, what's up for next week from an economic perspective? We have Canadian Housing Price Index out on Monday. We have retail sales on Wednesday. Excuse me. And then we have an update on the budget on Friday of next week. So for many of you, you've probably seen I put some of this stuff up in the past, but this is US real GDP nowcast. And so again, there's hundreds of different inputs you can look at. And ultimately, one of the most important things that I've found over the years is the rate of change really matters in most things. But the things that we've been tracking from a high level macro perspective is what's happening with employment. And if we look at this one throughout the middle here, which is aggregate work hours, aggregate labor income. And so Q2 to Q3, obviously we're seeing a slowdown, as I commented on the previous slide, slowdown there in those two areas. Industrial production, which we've had multiple quarters of slowing, that continues to slow down here as well. So that we should continue to pay attention to. The slight positive, I suppose, was retail sales. So we're starting to see a lot of the big companies start to try to cut inventory, so sales and such. So you got a slight uptick in retail sales, but this is a great chart of things that you should pay attention to in the economy. So as we look around the world, I think one of the questions I often get is, who's going to buy U.S. Treasuries? And so there is and continues to be a lot of buyers for U.S. Treasuries. This is an interesting chart that someone had posted, or Jim Bianco had posted, effectively saying, oh, maybe Saudi is selling their U.S. Treasuries to buy the things that they're buying. It doesn't appear so. If you overlay the actual interest rate adjustment, it looks like a natural mark-to-market adjustment. Looks like they mark their bonds to market on a continuous basis. So this is an adjustment based on yields falling yields rising and prices falling. So interesting to see where the assets are. Tremendous amount of buyers still for U.S. Treasuries. Oftentimes we look at what is happening with currencies, and one of the index that people look at, this is a economist index, it's the Big Mac index to show how your burger prices are changing, but ultimately this results in what's happening with the currencies. And so, for people traveling around the world, this is a fun one to look at. Obviously in Switzerland and Norway, it's very expensive to buy a Big Mac. Versus if you're traveling somewhere else in the world, you can buy a Big Mac in Taiwan for 60% less than you would in the United States, based on the conversion of the currencies between the two. So interesting way to track what's happening with the currencies around the world. I like to look at this on occasion. Canada, US, obviously quite similar here. So plus or minus a couple percent is typical for Canada, US on this index. And last one, because we've had a fair amount of discussions around crypto recently, so starting to give an update here. This is a great chart from Fidelity. They put out good research around it. Julian Trimmer, he provides update and comments around this. But I thought this was an interesting one because he's been following this since 2010, similar to the internet adoption curve that they've been using. So as we follow the curve here, we have Bitcoin, which there's a bit of an overnight correction and bouncing back from there now. But if this does catch up and start to track back to its curve, if you look at the number he puts here, December 6, 2024, is when we get back to retesting the kind of 70,000 US level on Bitcoin. So interesting to see how this is following and tracking. They use the Bitcoin addresses and the curve. So interesting to continue to follow this. We still believe that this is an important asset to have in portfolios. So that's it for me on the
Charts.
the charts. See, somebody
Good.
jumped up with a question.
All right, let's have a look at there. It's Lyle. Perhaps for another day, how does one consider investing in AI trends and its influence on the market?
Yeah, so we can
tackle that now?
certainly,
Yeah.
well, I'll give a couple points now, but then we can certainly elaborate as we go and maybe add a couple of slides as we move along through presentations in future times.
Okay.
I mean, AI is going extremely fast right now, and seems to be hitting pretty much every industry at different speeds and levels. Certainly on the kind of legal side of things, a bunch of the law firms globally have been talking about how they're using it now. It's a great data tool for research and information and jobs. How do you invest in it, though, is more of your question. Again, there's a couple of ways to play that too. One of them is to look at which companies are going to produce the chips and such that allow the speed to continue to be able to provide that ability for AI and kind of that machine learning portion of AI to move faster. And so those would be the NVIDIAs and of the world, and potentially some of the other names. As for kind of developed along the curve AI too, there's like IBM, which is Watson, for example. Watson's been in this space for a long time. So I'd say there's various ways to look at it and various levels of risk to consider when looking at it. And as we move along, I'll continue to provide my content and thoughts around it. I mean, we use AI on a daily basis as well within the team. And certainly we can talk about that as it moves.
Yeah, awesome.
Yep.
Okay, what are we looking at coming into next week?
Yeah, so
the backside of August, I guess.
So I'd say if you saw the information there, the data's a little bit quieter next week from a economic perspective in Canada, but we start to see some of the big banks start to report in Canada. So that certainly will be worth paying attention to, because as I scanned my screen today, some of the major banks hitting 52-week lows today. So the question becomes, at what point is that fully priced in? Some of these banks are down 40% from their highs, and you say, okay, at what level does that become enough for the point where we think it's reasonable to own them, where most of these banks, like Bank of Nova Scotia, for example, trades at 8 times earnings. Anytime it's got between 5 to 8 times earnings, it's been a screaming buy. So the question is this time different, or is it a ripe opportunity to pay attention to? So we'll be watching that next week.
You're looking pretty patriotic right there with the Canadian flag flapping in the background.
Mm-hmm. And
Must
the
be
peace
windy
tower
out there
on my
today.
shoulder.
Yeah, Peace Tower. It's super clear today. You can really see it. Okay, well, if no other questions, I'll move everybody on to their weekend. Thanks for watching, everybody. We'll see you next week.
Sounds good. Take care, everybody.